moving diagonally upward and to the right. That's because our option still lets us buy the stock for $100. If Hershey's is at 110, then we recover the $10 cost of the option. If the stock price is higher than $110, then we make a profit on the option purchase. The payoff line then is shaped like a hockey stick. It's flat at negative $10 until the share price reaches the strike price. Then it increases dollar for dollar with the stock price. Our profits from buying the option are limited only by how high the share price can go. When would you use a call option? First, you might be willing to take a chance on a stock. If you were confident that Hershey stock would appreciate over the next 90 days, then you could buy call options on Hershey shares instead of buying the shares themselves. Why would you do this? Because you can act on your confidence in Hershey's with a much lower investment. In our example, Hershey's was trading at $100, and if you wanted to buy shares directly, then that's what they'd cost. Options that are at the money or a bit out of the money would probably cost just a couple of dollars. If you're wrong and the stock stays close to the strike price or declines, then you're out the cost of the options plus trading costs. But if you're right and those options end up in the money, then you're going to make about as much on each option as you would if you had bought the share itself, and with just a fraction of the initial investment. You don't pay the strike price unless and until you have a profit. We've covered a lot of ground about investing strategies, and you might be thinking, I still feel overwhelmed. How can I be a better informed investor? Many financial advisors will tell you to read a lot, watch the business news, and pay attention to what the stock market is doing. My advice is to ask a different question. You don't really want to be a better informed investor. You want to be a better investor, period. People say that Abraham Lincoln read a lot. Many historians think that's not quite accurate. Honest Abe did read, yes, but what set him apart was that he thought a lot about what he read. So sure, read and watch the business news, but think about what you read and hear. If a company has strong earnings, then that's good for the company, yes. But does it make that company a good investment? Or has the price already risen so that it's too late to cash in? Remember the guys with computers who trade in microseconds? By the time you learn about those strong earnings, it's too late to trade at the old price. Or, if you read that the market has been volatile lately, with prices bouncing up and down a couple of percent almost every day, then what should you do? If the market is volatile, then you're taking more risk than you normally do. Maybe you ought to invest in safer assets for a couple of months to compensate. Regardless, recognize that you'll never know enough. Investing is a gigantic field, and anyone who pretends to know even most of it is trying to fool you, and perhaps himself too. If you're like me, that is, if you're old, then you get bombarded with offers to attend a free dinner with a couple of dozen other people. Your host will be an investment advisor, and before dinner, he'll give you his roadshow. Come to think of it, there's no free dinner either, is there? I admit to being a finance geek, but I just love these. As I watch the presentations, I keep asking myself questions and thinking through the answers. One advisor had a graph of his portfolio performance over the last 18 years. He'd never once had a down year. It turned out that he was hedging with options, and he didn't include the cost of the options when he calculated his portfolio return. When the market went down, his stock portfolio was hedged, but he lost on the options. The cost of those options wasn't in the graph on the portfolio, though, so it looked as if he never lost any money. You will become a better investor if you think like that. Use your knowledge of how markets work to try to understand what's actually going on. Think about when a particular strategy wins and when it loses. In our next lesson, we'll sift through the esoteric world of financial statements. Our goal won't be to become experts in financial accounting, of course. That would take years. Instead, we'll be focusing on a few key concepts so that we can understand the language financial accountants use. That's much less painful.